Yo, what is up guys? It is Kiss and we're back with one more video. Today's video is going to be very simple. It's just going to be going over my trades on this week, the week before Christmas, 18 to the 22nd of December. And I actually took only 4 trades today. So 2 on Tuesday, 1 on Wednesday, and 1 on Thursday. They were all winners. Tuesday I had 1 break even and 1 winner, but the break even one was stopped out in profit, so I consider it a win. Regardless, I'm going to be transitioning over to my TradeZella, and we can start going over my first trade. Alrighty guys, so this was Tuesday's first execution. This was during the AM session. I believe both were during the AM session, but this was during our prime time frame that we like to trade. So my favorite time to trade is from around 9:40, 9:50 a.m. to around 10 to 10:30, and once it gets past 11 you don't want to be trading that time. Anyway, so our first execution was at 10:30. We saw our model setup. So our model setup, all it is, it's going to be a breaker model, right? Now the breaker model is very simple. Here is the entry criteria. So you obviously want a high time frame PD array to be tapped into. Either that or a high time frame buy side liquidity or sell side liquidity taken. In this case, a PD array was tapped into. It was I believe, ES's 4-hour fair value gap. So that was tapped into, so that was part of the entry criteria. And this is the breaker right here. You have a low time frame liquidity sweep, so check. Breaker formation, check. So we have a high, higher high, inverse fair value gap within the breaker. And this is super important. This is what makes it high probability. Now, what does that mean? We have a fair value gap here, but what makes it your execution is, once price closes below or retraces back into it, which my entry, my short, was a retracement into it right there. So that was my short right there at 991.75. 991.75 was right here. So I shorted here. Entry once price closes past the inverse fair value gap. So around that area, that was my entry. Exit criteria. So exit criteria is where did I exit? So I'm going to show you guys here where I exited. Now, I exited at break even. This was the break even trade, hence the $10. So I went short here, price sweeps liquidity, and at this point in time, for me to exit this trade, the rules are you must exit once price closes past the inverse. However, for me, this was a little bit, I have room here from this high to this inverse. There's room to manage, so my stop was a close above this high. Price ran, and what I noticed is the candle hasn't closed yet, and we wicked lower, and that was honestly very good confirmation for me on my part, telling me that price wants to stay away from this high if we close below. The next candle displaces lower, and my target, now you're saying, okay, why didn't you exit, once we displace lower? My target were these relative equal lows right here. These relative equal lows were, at the time they looked very high probability, but I mean, obviously it didn't work out. Price comes up, and I get stopped at break even. Now, I was in profit on this trade 530, so that would have been a good trade for the day. It would have been a good trade. However, I call it a day here. I journal it. I said quarterly theory wasn't in mind in the trade. You can go ahead and pause and read that. Now we're going to go over to the next trade. So it did switch the candle color, which I did want it to stay black and green, but it's fine. So here's the next trade. This was on the same day. It was on that same Tuesday. And this trade was actually during, or I mean, a little bit past lunch. It was the lunch macro, which is at, or post lunch macro, which is at around 1:30 New York, 10:30 my time. So typically around this time you'll find a model setup. At around 1:30, it's an actual macro. ICT talks about it. And we had a liquidity sweep right here. So it's not as noticeable, but you can see it right there. We had a liquidity sweep. And like I said again, part of our checklist. Low time frame liquidity sweep, breaker formation. So where is our breaker? We have a low, a high, lower low that sweeps liquidity. And do we have, this is the important part, do we have an inverse within our breaker? There is our inverse right there. Did we close above the inverse? Yes, we did. Now, where was my entry? My long was at 987.25. So 987.25 right here on this wick. So I didn't enter at the close, which you could have entered once price closes here, and you could target this this high right here. But you know that's internal liquidity, so that's what we targeted. I entered once price retraced into the inverse. There's also a fair value gap right here. You know that could have been your other reason, your other confirmation, but my confirmation was the inverse. And typically you'll get both, which you know that makes a BPR, and that's even higher probability. So 987.25. 987.25. Our entry for long was here, and I targeted internal liquidity here. You could also target, you know, if you entered with multiple contracts, I only entered with one. As you can see there, 1038 plus one. I only entered one contract. If you enter two or three, you could have take profits at each one of these highs right here. And like I said before, your stop loss is either a close below the inverse or the low, depending on your risk management. In this case, we actually never retraced back into the inverse or back, you know, into this level. And we actually met our, you know, if you had multiple contracts, our high here. And obviously the exit was on this candle. I didn't exit at the liquidity sweep. I just wanted to get in and out quickly. I don't know why. Just because I never traded this time. So I'm not sure how price really acts around 130. So as soon as I saw price start to slow down there, I exited 998.25, which was right here. So entry here, exit here, you know, little scalp. 220 for Tuesday plus the 10, so 230 on a Tuesday doesn't sound too bad. Now, that was Tuesday's trading session. So you guys can go ahead and pause right here, read the journal, the trade note, and we can go ahead and move on to our next trade. Alrighty guys, this is Wednesday's trading session, and this one was also the same exact setup, just that this one, instead of looking at external liquidity, we're actually taking the model off of internal liquidity. So as we can see here, we have this external high right here, right? Let me get rid of the volume. We have this external high right up here, which is AM sessions high, and we shortly after displace lower, right? Now this high doesn't sweep this previous high right here. And if I do remember correctly, ES actually swept this high right here. So let's go to the charts and let's go to 10:45 on ES on Wednesday. Alrighty guys, so we're on ES right here, and this is on Wednesday at 10:45, and this is on the 2-minute. 10:44, 10:46, since we're on the 2-minute. And what do you notice here on ES? We have a higher high on ES, and on NQ we had a lower low. Now for those of you that don't know what that is SMT, Smart Money Tool, Smart Money Technique. Now since NQ does move is a little bit more liquid, I did take the trade on NQ over ES. As you can see, ES's drop wasn't as volatile as NQ's drop where we had more movement. But with that being said, now that we know that SMT is in play, what can we look for now? So let me actually mark out, you know, just like we did before. Let's mark out the fair value gap, which is going to be our inverse. All right. So now that we have our inverse fair value gap here, where was our close below? It was on this candle, right? And our short entry was here, 49.25, which was right around here. So we were a little bit late to our entry. Our entry should have been there at the close below the fair value gap. We were a little bit late. Price runs lower, draws back into it, and then displaces lower. 2 and 5-minute entries. So the first entry was on the 2-minute. Now if I go on the 5-minute, we also have an inverse, and this one's actually much cleaner than the 2 minute. It's smaller, tighter range, and that was actually where we took our second entry on the 5 minute, 54.75. And if you do trade this model, you'll notice that the 5 minute is higher probability over the smaller time frames. You'll find much larger moves off of the 5 minute. 54.75 was our second position, 54.75, so exactly right there. And 42.25, our first position closed here, and then 39.25, second position closed here. So we caught basically the high of the retracement down to close to the low of the retracement. And that rewarded a nice 450 on the Wednesday. And as we can see here, we marked out our criteria. If you guys want to, write this down, screenshot it. It says rules followed, but I mean, they're all discretionary. Like for example, high time frame PDO rate tapped into, it was on ES. It wasn't on NQ. So I'm also watching ES as I'm watching NQ, and this is actually the high time frame PDO rate we tapped into that was used to frame our model. And this is actually a 4-hour fair value gap on ES. So we use that to frame NQ's model. Low time frame liquidity sweep, I checked that, but it wasn't on NQ, it was on ES. So that is considered SMT. Breaker formation, check. Like I said, not on NQ, but on ES it is. Entry once price closes past the inverse, check. Or the breaker. They were both closed below, so that makes it even more higher probability. So with that being said, let's actually move over to our last trade of the week, which was yesterday, Thursday. And this was our biggest trade of the week, and I would say the best trade of the week. So this one was taken on the 3 minute. Now this one was taken on the 3 minute. There were other higher probability entries on, I would say the 2 minute was a bit better for this entry, but the 3 minute did us justice. So the 3 minute was our entry, but what did I look for? On the 2 minute, we had this fair value gap right here. And this fair value gap is actually part of our breaker entry. So this entry was actually on ES instead of NQ. But what do we notice here? So we need a low time frame liquidity sweep. That's a must. High time frame PD array is discretionary. So that's kind of like an if it taps into it, then we look for a low time frame. But you will always need a low time frame liquidity sweep either on ES or NQ, depending on which one you're trading. With that being said, we had this high violated, and we had this high violated. So what does that make this low right here? That makes it an order block, right? So if we have an order block here, and if I get rid of these two fair value gaps for now, if we have an order block here, price should respect this order block, correct? What happens when price closes below the order block? There's a change in the state of delivery, and it becomes a breaker. Now you could short the retracement into the breaker, or the aggressive entry, which is what I did, was a short once price closed past the breaker. Now, the breaker is very simple, the breaker model, but if you incorporate the inverse fair value gap, you can find an even better sniper entry. For example, here's our inverse. Your entry would have been there, or a retracement into it. My entry was at 781.25. 781.25 is right here, so it was this candle's low, and that was once price closed below the breaker, but the confirmation wasn't on the 2 minute, it was on the 3 minute. It was once price confirmed a bearish order flow. Now price is confirming a bearish order flow when it respects bearish PD arrays. The 3 minute had a bearish CB right there. Retraced into it, respected it right there, as you can see by that close. I dropped down to the 2 minute. Do we have a breaker? Yes, we do. Mark out the order block. That then turns into a breaker. This candle right here closes below it. Entry at this candle 781.25, which is actually right there on the dot. And we short to this order block here. This down move right there. So this candle, these pair of candles, that is our exit. once price taps into it, 775.75. 775.75. It was actually right around here. So we caught this high to this low. Once price starts getting close to the order block, I typically exit my position because then you have a move like this where we completely retrace. And even if you went stop to break even, you would have gotten stopped out break even. So I entered two contracts, as you can see there, 704 minus 2. Went short two contracts. I could have done one contract here at the order blocks, the next one to break even. I just exited there since I knew price was gonna have a deep retracement and it wasn't even worth the break even, you know? So I hope you guys really understood the model, and by me sharing this video, you guys have a better grasp on what to look for on a day-to-day basis. And hopefully this checklist helps you guys out. And thank you for watching. And if you guys really did enjoy this video, like, and if you guys can comment letting me know that you did enjoy the video, that'd be greatly appreciated as well. And I will see you guys next week. Happy holidays, and you guys have a nice rest of your day. Peace.